you guys? So a fellow participant of the markets asked me to give MMAT a look. Now, he actually asked me this about 2 days ago, and I feel, a little bad because, as you can see here, so I had actually already started charting. I had already started charting this, and I had already caught this descending broadening wedge, and so I actually just made a quick little note here that we actually have, if you take a look at this, the candle structure, we actually have not come back to retest this new converted support. So converted because we were within the broadening wedge, and this would be resistance and this would be our support. So now in breaking out of it, we are converting it into a support. So usually when we break out of channels like this, or wedges, or anything like this, or triangles, we tend to come back and test and confirm or validate that we do have an acting support here before we take off. So what we're looking at here is just an impulsive move to the upside. However, with its credit, it has been kind of happening for a couple days now. So I see here that this is actually a valid breakout, and the reason why I can tell you that is a valid breakout is because we have. Let me get a little bit of a drawing tool here or something. So we have potentially test number 1 right over here. We have what could be test number 2 right over here, and test number 3. So usually we tend to have this could be 1, 2, but it could arguably be the beginning of the channel as well. I chose it here only because it lined up very well to this candle here and this candle here. So it could, it could be, or it's a little too speculative for me to be able to call it first test. So this is following what we usually call the golden rule of 3. So we have a failed breakout 1, we have a test 2, we have a test 3. Usually after test 3 we do the big sell-off for accumulation. This would be an entire accumulation period, in also consolidation. We are actually trading sideways here for a bit, with the exception of this last test of the support. After the third test, we would come up to actually break out. The reason we have 3 is because we need at least 2 touches of the resistance in order for us to validate that we are in fact in a descending broadening wedge. If the wedge is trying to break out on the second test, it's likely that it's going to come back and test again on the third and fail it again. So this is actually a pretty textbook setup. Also, the fact that it closed here is very curious, because usually when you have a breakout from a descending broadening wedge, the price objective is usually the genesis of. Hold on just a sec, guys. Let me just rewind this video. I wish you could see what I'm doing. I'm actually my toddler has had kind of a night, so I am actually rocking him to sleep right behind me. So I apologize if you guys can hear some music. It's actually Disney's Soul. I put it at the credits, and I try to rock him in his stroller until he falls asleep. I figured I'd take advantage of this time to show you guys some stuff. So now this is the genesis of the pattern here. So we would take a trend line, and pretty much park it right over here, which has, as you can see here, it has pretty much direct confluence with it. Another thing we can do is pretend like we weren't, we pretend like we haven't broken out already, and like go back just a couple days and take a Fibonacci retracement tool and take it from the top of the range So this being the range here, just a few days. So we'll take the fib from here. That top level, this top level is probably going to line up with the last fib, the 4.618. So we just take it to the bottom of the range, and what do you know? So it does line up with the 4.618 at $1.08. But you know, let's see, the high was a wick to $1.10, and we are closing on this spinning top doji right at the 4.236 at $1.05. So this is actually respecting some market geometry, and we do have confluent targets. So now that we did touch this 4.618 top, I would honestly be expecting a pullback. Now the thing is that this has a lot of what you can call a psychological component, meaning that it's gone up so much and people can trigger a FOMO rally. So the FOMO rally could actually take this into higher levels. You know, even algorithmic trading or high frequency algos can take advantage of the psychology behind what's happening here, and ride it to a new level. The way we can tell if it, you know, the way we can tell if, you know, they'll ride it to another level is actually just taking another Fibonacci from this new high to the range low. The range low being, I guess we can take it down to here. We could also take it to the beginning of the rally, which could be arguably here or right down here. So let me actually just take it to here and see what that gives us. So, oh man, sorry guys. I hate it when that happens. I hate it that I'm always hiding the toolbar down there, but I really need it to hide. So let's take a fib tool here. Take it from the range high to the beginning of the range low, right over here, and we have some projected targets via Fibonacci retracement. So let's see if we have any confluence within these targets. Okay, now we just zoom out. Let me just get rid of this and get rid of this right here. Let's clean up our working space right here just so that we can be able to process well. I decided to do it like with a video or screen recording like this with voice, so that I can be able to direct you guys a little differently than how I usually show my threads. Okay, so let's just go. Okay, so here, this is an interesting target right here. So $1.35 is landing. Let's go ahead and draw a trend line right at the 1.618. The 1.618 is actually considered to be our golden pocket, or the golden ratio. We tend as humans to want to take the trade to the 1.618 and its inverse 0.618. Hence, when we actually took it to here, it ended at the 4.618. So it's a very special ratio. So we can see that the 1.618 has a key support here, and now it's going to be acting as resistance for us. If we zoom out some more, we're likely going to see some other areas of interest. What we're doing here is looking for confluence and looking to see how valid that resistance for us is going to be. So we can see that right over here, we definitely tested it. We tested it right there. We have it tested as a resistance right here. It looks like it was rejected as a support right here, a bounce off of it. We have it all right there. Yeah, this is a pretty good area. It looks like it's been touched a few times. Oh God, look at this. It's directly on there, right over here. So we can keep on zooming out and checking it out, but at this point we can already see that that it is an area of interest. So But what tells us that we're going to go up? What tells us that we're actually going to do, that upside move, considering that we've already moved this high up, which we should actually take a measuring tool and see just how far we've moved. Let me just rewind this thing one more time for my baby boy. And okay, he's already yawning. That sounds good. Okay, so we can take some basic tools. First, we can use my RSI, the Arca RSI, and see what that says. Okay, so let's measure that percentage. Actually, from the very range low, we can just measure all the way to where it went, which is right at the wick top right here. So that is a 73.66% move. It's a fair move. That's some people made a lot of money here. Now, what we need to keep in mind here is that the 6 hour is at extreme overbought. So we're at 84.73% of the RSI overbought level. The moving average is still just on its way up. We do have, let's draw a trend line to see how many times we've even gone to that level in the 6 hour. So let's draw a horizontal line and zoom out a bit and see how many times we've touched it. So it looks like we've touched it once before. We've gone past it twice, 3 times. We reversed from it here again. Let's keep on going back. And chances are is that I don't know if I already called these, but there's 2 touches there. Here's another one back here. Let's keep going. Let's see. This is actually, I wish I was on my computer in my desk. This laptop is a little slower, but it's still okay. Alright, so within the 6 hour, could this be the... Yeah, this could actually be IPO. Yeah, this dinosaur tells us. Okay, so since it's IPO, we have reversed from the 85 percentile. 1, 2, 3, 4, 5 times. Now, like the way that I perform my analysis is that I backtest. So, in essence, this would be kind of like a manual backtest, which is usually what I do. I usually backtest by hand, which is the most effective way of backtesting. There is algorithmic backtesting, and it can be performed in this platform, TradingView, using the Pine editor. But I am not there yet, so let me just go ahead and show you guys what happened when we lifted that far up. So let's measure the lift, because that is quite a substantial jump here. What happened from this area here to here. So let's see, let's just zoom out a little bit, or sorry, zoom in just a little bit more, and take a quick measurement of this iteration here. This being the first iteration, actually, just to be clear. So let's measure all the way up here, and that was a 212% jump. That is massive. And it reversed, but it didn't reverse all the way. It actually created a higher low structure. So if you take a trend line from here and you draw across, you're actually going to see some pretty interesting patterns like this. It's actually, this is what I meant by it respecting market geometry. It looks like it's being traded by algos. So this is in essence a very large, what could be possibly, since we're coming down This could be actually a very big rising wedge. Rising wedges are usually bearish, so we can take a trend line and draw it straight across. We could do it on a wick basis, you know, and the reason we can tell that it is a rising wedge is the fact that it did fail. And yeah, so this was, yeah, so we had a massive lift off right here to create the top, or sorry, the beginning of this rising wedge. The rising wedge happens specifically after a downtrend. So, and it eventually failed it. So now the bigger the pattern, I guess, the bigger the fail in this sense. And it honestly realized, first of all, because it is a triangle, and triangles in general have a higher hit rate, being that they are both equipped with a psychological component. You know, market sentiment sees it, they trade it, and also because they have mathematical properties. So as we can see here, it failed it and, you know, consolidated for a bit and then just dumped off. So yeah, this was a successful short trade for whoever participated. So that's beside the point, but it's important for us to notice that it is respecting things like this, because let me rewind this thing for my boy one more time. Sorry, guys. Okay. It's important for us to notice things like this because chances are is that it'll probably do it again, and we can refer back to its historical data and see that it is respecting formations such as that triangle. Okay, so let's get back to where we were and take a look at some smaller time frames on the RSI. Okay, so this is, and just so you guys know, I'm actually on a logarithmic chart. I find that log is a little more precise than the standard chart, and yeah, I mean, it doesn't have to work for you. It just it works for me. So they have it. They have the option for you to do either or. Some people don't use it. Some people do. You know. So okay. So now we see a high probability that we're gonna you know, pretty much pull back. Hey boy, it's okay. Hey, you're okay. Okay, so sorry, my dogs are right behind me too. I have the whole squad taking a nap next to me. Okay, yeah, so let's please remember that this is not a guarantee. Only because we're at overbought levels and at extremes, it does not mean that we are going to reverse from here. Technically, this is just an indicator. We can overbuy forever. You know, it does, only because it reached 100 doesn't mean that it's going to guarantee a pullback. It's just a general variable for human trading. So that's just what we do. And also, please remember that we have iterations to where we've gone higher. In this example here, we have a 90. We're in the 90 percentile here, so that's quite significant. We can still actually go further up, and we can validate that by looking at some smaller time frames. And with that said, this would validate that we are going to move from 105 to potentially where I mentioned at $1.35 at the 1.618 fib ratio. So let's go ahead and drop the time frame to a 4-hour, and let's see the RSI there. It's, you know, it's going to be over bought, of course, too. So okay, and funny thing is that this iteration happened at exactly the same place before it pulled back. So okay, this is, it's showing a small pivot, very slight pivot. There are times to where it just, you know, automatically sells off, and there are times to where it just starts to kind of roll into the position and kind of come back, you know, similar to this action here. So let's keep on going down the smaller time frames. Let's go to 2-hour. This is the bi-hourly RSI. We're showing that it's already doing more of that curve that I was just speaking about, and it is reversing from the 89.34% area, so of overbought, sorry. So let's go to the hourly. Okay, it's showing some type of weakness from let's see, from 87.63%. Let's go into more immediate short term. Okay, this is showing us that we do have that we do. Okay, yeah, this is good for you guys to know. Okay, the red line is the moving average. It's based on a 14-day moving average. Hold on just a sec, you guys. Hold on. Okay, so yeah, like I said, sorry guys, sorry. The maroon line here is actually is based on a 14-day moving average, and the RSI signal blue line has actually crossed below. That's usually a bearish cross, and it looks like it's pivoted to the upside, but it may reject. It may reject the from the moving average. Let's rewind this thing one more time. Okay, now let's look at the 15-minute RSI. Okay. Yeah, we're looking at a bit of a regression, rejection type of situation right here. The moving average has also sloped to the downside. I would call an immediate short time frame pullback. As you can see right here, we have now in the 5-minute. I mean, this is really micro time frame. I don't really trade 5, 3, 1, even the 15-minute. The 30-minute is probably the smallest I trade, but just so that we can be able to gain an idea as to what MMAT is doing, we can just look at it for now. Okay, so it definitely reversed from 85, 86%, and it bypassed entirely the bullish strength percentile. So now strength actually rejected it, and now it's in bull weakness percentile. So this area, we're very susceptible to falling into bear weakness percentile, and this would be the bear strength down here. Okay, so let's go to an 8-hour. We're still at a straight up slope. 12-hour, a little bit of weakness, but it's still facing up. This still has a lot of room too. This is at 77% overbought. Let's go to the daily. The daily is at 72.49, is barely overbought. Okay, guys, yeah. So I honestly think that I can perform a deeper analysis in on MMAT, because the chart actually, the lifelong chart of this is pretty attractive. It doesn't have it doesn't have like anything really bearish to look out for. The life of this ticker has plenty of upside. These sell-offs, of course, they're dangerous or whatever, but this has promising volatility, which could be a safe haven for day traders and swing traders and such. So what I was going to say is that the 5-day look at this, the 5-day RSI is actually pitched to the upside, and now it's in bear weakness. So I can see maybe a few more days of upside. Who knows if this thing just goes all the way up to the 4618 of the new time frame that we looked at, into $2.56 level to test these resistances here. But for now, I think not financial advice, guys. Don't by all means don't do what I say. It's just, this is a very light analysis that we're looking at right here, and I honestly owe it to the participant that asked me in my DMs. If you're listening, buddy, I apologize for looking at it this late. I feel like you could have made the decision, really made some money here. I hope you did, because you asked me to look at it when we were down here, and that's a keen eye. So yeah, you guys, I think I'm calling a pullback to let's see, we're at 105. Possible pullback to 101 with a wick down to close to 95 before continuing an upside, finding resistance here at the 121, and that could be possibly by mid to late session tomorrow. And I mean, if it has the juice to be able to go all the way up to the 1.618, 135, It could do it tomorrow only because of, well, today it's already, I'm in LA, it's 3:23 a.m. right now, so CPI data is going to be out pretty soon, and if CPI is a beat, then this this can actually just propel all the way up to here in one trading session. Otherwise, if it does not, and we do face bad CPI or a miss on CPI, then we could potentially retrace or pull back temporarily to 95, followed by 85, and then within the second session, we can actually come back to test the support of this, which is something that we're supposed to do anyway. So I believe personally that the CPI is going to be a miss, that we have not really fixed anything with the Fed. I believe that we still have time. Within this bear market, we still have another, I believe, 6 to 9 months minimum. So, but you never know. That's just my opinion. It's not. I'm nobody. So I find it likely that we're gonna hit a miss, and little tickers like these could be signs of how the market is gonna react. Like I'm telling you that we're missing that retest or the test of the newly converted resistance into support. So it's possible that we're going to do a miss and we come back and test this right here and then launch again. So but like I said, don't trade on, actually I wouldn't suggest trading tomorrow whatsoever. The reason why I say this is because there's going to be an extensive amount of, or an exaggerated amount of volatility due to the news. Maybe the overall sentiment is still a little too bullish, but either way, you guys, you know where to reach me. Please join the Discord. The link is actually at my on the bio of my Twitter page. And if you have any questions, you can always comment or message me, DM. I also have messages on Discord as well, so please just reach out. And I hope you guys have a good day tomorrow. Make sure to use risk management properly and use those stop losses. Even if you say that you're going to use it and you don't say it, and you don't use it, just make sure that you do. The stop losses are there to make sure that we survive for another trading day.